proposed regulations under 6045 are what we in the industry are currently calling the broker reporting requirements or regulations. Generally speaking, what the IRS is trying to do here is push some sort of reporting requirements onto everyone that they classify as a broker, which means exchanges, DeFi protocols, wallet providers, really everyone that kind of touches digital assets or is involved in the crypto space. And what they want to see reported are things like sales proceeds, basis information, holding period requirements. They're really trying to make crypto function kind of like typical securities reporting does, where you get the 1099 at the end of the year from your brokerage or your financial advisor or something like that, where all that information is reported. That's kind of the gist of what they're trying to do, and whether or not it works over time is something that we'll figure out as we go along. It makes sense because, at the end of the day, it's going to simplify things for taxpayers filing their tax returns if it works. And I say that, as kind of a big caveat, because right now there's a lot of complexity in this space, as we mentioned earlier, with the free transferability of crypto and things like that. Things like basis reporting are almost assuredly going to be wrong, at least to start this kind of reporting when it comes into play in 2025. But the overall scheme of the broker reporting regs is to increase transparency as to what's going on in the crypto space, which isn't necessarily a bad thing, to increase tax compliance, which again isn't necessarily a bad thing, and three, to simplify things for taxpayers, which again is another thing that's not necessarily bad. But taken together with the scope of the regulation, they're going to be almost impossible to implement for most crypto providers. The larger exchanges, they can probably figure this out, but a lot of the DeFi protocols, a lot of whom are startups, by the way, are going to face huge compliance costs in trying to implement these regulations if they're finalized as they're currently written. Well, we don't know what's likely going to be changed, but what we're hopeful will change is the definition of broker. That's where a lot of the industry is focused right now, because taken as it stands right now, the definition of broker is kind of a dragnet across the entire crypto industry. It includes things like exchanges, DeFi platforms and protocols, liquidity pools, miners, all sorts of things. And a lot of those are going to have a hard time complying with this, because most of those activities as they exist now aren't KYC. In fact, they're anonymous. They operate at the wallet level, and there's not necessarily a way to tie the wallet to an individual. So that's really where we're hopeful that there's going to be some changes. The rest is going to be around basis reporting, because that's going to be incredibly difficult to do based on the transferability of crypto, without some sort of overall system where these different platforms and protocols and exchanges can share information, which doesn't exist yet. So those are the two big areas that we're hopeful we'll see some sort of change. Well, far and away, the biggest one would be the wash sale rules. These are rules that apply at the level of securities, which are, your commonly traded stocks, bonds, and mutual funds, but they don't yet apply to crypto, and they allow the exclusion of sales that occur within 30 days of a purchase from recognizing a loss on a tax return. That currently doesn't exist for crypto. So what that means is that if you are holding crypto at a loss, you can sell it, recognize that loss, and then immediately buy it back. That's something that you cannot do with traditional securities. Congress knows about this. There's been numerous attempts to try to close this loophole, as they call it. It's been attached to a couple of bills and then removed at the last minute. One of the last ones was a Wildlife Protection Act that was back in over the summer. So I would expect there to be a pretty concentrated effort to close the wash sale loophole as it exists right now for crypto in the very near future. Beyond that, I don't necessarily see any sort of big omnibus crypto tax legislation coming down the pipe. I think it's going to be a lot of kind of smaller things that are tacked onto the end of other bills that we'll just have to kind of read through and determine what they mean as they're passed.